Hey traders, Nikki here, or Fit Trader Chick, and I wanted to give you a market review of basically what I'm seeing in the market. This is a daily chart of the E-mini S&P 500, and we have been in this upward trending channel. You can see that we have this resistance trend line here, and we have this support trend line here. So, basically we're at the top of this channel right now. This was today, this red bar was today. So, we could see a few things happen from here. If you notice, one thing to look for when you are kind of in an overextended bullish market is when you are at the top of some type of technical area, you want to be aware of breakouts because breakouts might not work as well. Buyers might not want to be buying up here. So we have to kind of keep our eye on the market from here on out, see what it does, and base our trading decisions off of that. Today, I really was looking for a pullback in the market. I've been looking for a pullback in the market, and whether we're actually going to get it or not, I don't know. But what we did was on this bar here, we actually intraday broke above yesterday's high, making even more all-time highs on the E-mini S&P 500, and then we continued lower. So once we got to our low of the day, buyers bought the market back up, and we ended up closing, right in the middle of this candle, of this daily candle. So what that tells me is, bulls are still in control. We are still in a bullish market. And basically from here, what I'm anticipating to happen, which again, I don't know if this is going to happen or not for sure, but I'm anticipating us to kind of continue following this trend line. I mean, based on the technicals, there's really nothing telling me otherwise. So what we could see is we could see sellers start to take control, push this market down a little bit more, follow this trend line, and use it as support. We could also just kind of bounce around and consolidate up here near these highs, and it could get kind of boring for futures trading, but it could be good to stabilize the stock market and things. If buyers have confidence that this market is going to stay high, the bulls are going to stay in control, we might start seeing that strong buying again in the market. But right now things are kind of settling down. As far as breakouts go, you either sometimes don't see follow through, or things just aren't really breaking out. They're kind of more consolidating, waiting to see what's going to happen in the market. Right now is a very kind of wait and see zone. I don't want to be too aggressive with breakouts. I would be more interested in shorts and being more aggressive with shorts if this market does continue lower and we do see, follow through to the downside following, the next few weeks. Now, that doesn't mean I'm not going to take breakouts. I will definitely take breakout plays if the setup is there and the entry is there and the volume and momentum is intact. But now's kind of that time where I'm pulling back and I'm kind of pushing the brakes on my basically tenacity when it comes to these breakout plays. Now let me just show you an example of what can happen with an overextended stock, and maybe that'll kind of give you an idea of what could happen with an overextended market. So let me just move to this trade today. So sort of the same idea with overextended markets. We have the same idea with stocks. QTWW was a big play today that a lot of people either took or were interested in, or it was on their radar. This stock's just been going up with no correction. This is a daily chart here, so you can see the stock has basically gone straight up, and look at what happened today. Today basically was a huge sell-off day, and I think a few things could have contributed to that. Obviously, we had a down day in the market. The market sold off today. So a lot of stocks were actually in the red today. If you actually look at my watch list, you can see that most of my stocks that I have on potential watch, or maybe they were on watch today, a lot of them are red. So these stocks are following the market, on a short-term basis, meaning they're kind of pulling back, they're consolidating, which is exactly what the market's doing. Now, this was a great play today. There were definitely opportunities to get into this. This was on my watch list for this morning. I personally didn't take it, but it had the opportunity and it was there in front of me. It's just, my own trading was a little off today, so I didn't take this. But still, the point is, with overextended markets come big pullbacks. And Chris always says that, the market will take the stairs up and the elevator down. And that's a very common, saying amongst traders. And that's exactly what you can see this stock did. So don't be surprised if you do see a pullback in the market and sellers start to kind of take control from here. We could see what happened here and, what happened here, where the market's basically just having a healthy pullback. The market needs this. I think that when the market gets a little too overextended, it's not necessarily a great thing for traders all around. We don't want to see the market not have healthy corrections. So just be prepared for what could happen, meaning a pullback or some consolidation around these highs until the market figures out which direction it wants to go in.